Hello everyone, this is Jim from the Art of Finance. Welcome back to our channel. We are with you on 25th of July. We are getting the end of these months at the same time, the first month of the second half of the year. All right, things are this month is kind of sideways. I will just talk about this and then we will just see that one. And we have seen record prices of everything, many things, especially because of this war. And then people just get used to these things. Like they just find this point alternatives about these kind of things. And right now we see some easing in some certain things. I will start this video with wheat prices. All right. Our first chart is wheat. As you can see here, wheat prices are on decline. The reason is production of local production of wheat in countries. At the same time, the last week on Friday, 3 days ago, there has been an agreement in Istanbul between Russia and Ukraine, and both countries and United Nations as well, joined that meeting as well, and then they have signed a pact on free trade of without any problem of these wheats. So if that happens as expected, we will see declining wheat prices, but until a certain level because the costs are still elevated. So what I'm trying to say is the oil prices, the fertilizer prices, and also labor costs are still high compared to previous years. So to be able to speak about a $500 or $600 wheat prices, we have to see a massive recession, or we have to see some other factors like declining commodity prices, declining fertilizer prices. If that happens, we will definitely see more decline in wheat. But right now, the first level to be tested on lower level is 750. Maybe we can see 600 levels, but I don't expect anything lower than that, as long as high oil, high gasoline prices affect the production. But still, compared to this level, compared to almost 1300 level, and right now, definitely there is $500 decline in a few months. In 1 ton of wheat. That's good for global food security because undeveloped countries are affected by these high prices of that one, and social security, social unrest is at least not happening in these countries. All right, let's look at our second chart.
You are ready to win with us. GAN Markets.
All right, our second chart is natural gas. As you can see here, natural gas is rising from these low levels. And the first news when the first news of Freeport LNG terminal blow up, explosion happened, then we have seen these sharp declines and then just happen like that. And right now, from the beginning of July, as you can see here, it's rising. Why it's rising? Because Nord Stream 1 pipeline is not working fully. So demand for US natural gas is rising at the same time, and really high temperature levels in US is just feeling the need for electric. And easiest way right now in US, just burning natural gas to supply these high demand with natural gas produced electricity, because air condition and other these kind of things or air compressors need this electricity. So demand for natural gas is skyrocketing. That's why we see the skyrocketing price of that one. We will receive on 29th of on 28th of July, on Thursday, we will receive first estimate for GDP second quarter in US. If we just talk about a recession, then we can see some decline on that one, because on recession times there will be less demand for oil and gas. If it doesn't happen, if we see like some improvement in recession, then we can see higher level of these. But as long as this is happening, some kind of correction needs to be done. And then if you catch that sharp sell of something like this, definitely sell and take profit. But on this term, there is a good channel on rising rising natural gas prices. Another important thing, if we just receive something and like a full like maintenance of Nord Stream 1, and then like a new LNG contracts supply to Europe, then definitely we will see decline in natural gas prices. Alright, our last chart is, as you can see here, US oil. US crude oil prices are just trying to higher level, but it's getting rejected from EU from every attempt. This was important because like when we just like see a sharp decline, it tried to recover and then test this 97 level, and it get closer to this one and like this. So each attempt is just end up with a rejection. That means when we see more rejection in something, as you can see here, then we see declines. So Fed, when the Fed just release their interest rate decision on Wednesday evening, then we will just see that more like a higher level of dollar index, and it will definitely affect the price of oil. And also recession fears are affecting these prices of oil. And we are in the like end of July, and next week we will be in August. These are the highest demand for highest time for demand of oil, because everybody is traveling, airline companies and are just full, and then people are just like traveling for a lot longer than usual times. That's why the demand is higher. When this is over, especially in the second half of August, I'm expecting, if it just like it goes sideways in this channel, I'm expecting $10–15 decline in that period. If we just hear more recession news or new COVID variant news more in the TVs, then we will just see sharper than expected declines. That's for sure. Alright, thank you so much for watching us. We will be together on more news, and then we will cover more charts with you. Have a nice and profitable day. Bye.